Welcome to my YouTube channel, The Unfolding of the Market Crash. Before I begin today, I want to show you something I think is very important. We have many people are buying on what they call buy on the dip. Buy on the dip. This is what you're hearing all day long. If you're listening to the financial news channels, the terrorists, especially Fox or CNBC, they're always telling you, buy on the dip, buy on the pullback. It's the most dangerous thing you can do. Let me show you on the chart what I'm talking about. My chart, we have an advantage because these charts are patent. Nobody has this. But before you buy on a dip, you got to remember, stocks can be going up like this, but you have more money going out than going in because this is called short covering. So people who are selling the stock short are taking their profits, moving it up. So a lot of people start buying it, like right down here. Now another problem is you got to wait for the trap doors closed. See this red line here? You want this red line right here. You want this red line. Let me get it here for you. You want that red line to start crossing over. We call it closing the trap door. This red line's got to go over and cross yellow. That's called closing the trap door. That means the money has stopped flowing out. Selling has stopped. And then all you do is wait on my chart, which is patent. Nobody else has this. You just wait until we get either a yellow warning. Many times we'll get yellow first, which is a call to action that money is starting to flow into the stock, or it'll turn right to green like this. And then it tells you that's your buy signal. But the important thing is make sure that trap door is closed. I'm going to show you here. Let me just show you right here. Let me get this, slide this over for you. Okay, here we go. This is what I mean. So you think of it as a trap door. You got to shut that trap door behind you before you buy. Okay, because if you don't, you're going to lose money every time. There's another thing that's going on. They're telling you every day how great the market is and how it's making new highs, new all-time highs almost every day. Listen to this cut.
Stocks edged higher, powered by a stream of earnings beats. The Dow jumped 198 points. The S&P rose 33. 5-day win streak, both indices sitting right back near record highs.
So he's telling you how we're at record highs, and for 5 days they're making new highs and all this garbage. What he's not telling you is we have more stocks that are below the 50-day moving average than they're above it. That's bad breath. That's very dangerous. You always check and say, okay, out of your Dow 30 stocks, and as of today, 10/27, we only have out of the 30 stocks, 11 of the 30 that are above the 50-day moving average. The rest are below. Very dangerous. So stop paying attention to these financial shows that are telling you the worst stuff. Okay? So we got more sellers than buyers, yet stocks are going up, and that's why you got that trap door closed behind you. Just because it's going up, remember, please don't fall for it. And over here, same thing. If you're buying stocks, that's fine. And if you got a good stock, that's fine. But you got to be aware that the market at any time can have a correction. Not talking a crash, but a correction, because we have too many stocks that are below the 50-day moving average. All right, let me talk a little bit about, if I might, what is going on. All right. We've been lied to totally about inflation being transitory. That's such a lie. We've gone from inflation to stagflation. Now, stagflation is brutal. Very seldom do you get stagflation. It's nearly impossible to have stagflation. Because to get stagflation, remember, you got to have a combination where you have a situation where economic growth is slowing, but you got inflation. To have economic growth slowing and have inflation at the same time, it's almost impossible. But when you get that, which we have now, that means that you're in a stagflation, which means the interest rates right now, the real interest rates, are about 13 to 15%, not the lie that they have at 5%. And it's very difficult to get out of stagflation, nearly impossible. It's really tough. So we are in stagflation. The only thing that's keeping the markets going up, okay, even though most of the stocks are below their support, is this crazy $125 million they print every month to push the stocks up, called quantitative easing. So this whole stagflation, the purpose of it is to ramp up inflation so that no matter what president is, they always do the same thing, so they can reduce their debt. Biden has a problem. Biden's presidency is being based on this $5 trillion package. Whether it's $2 trillion, $3 trillion, it doesn't matter. It's based on that. If that fails, he's going to be what he is, a big failure. Now, what's happening is with this stagflation, he needs to keep lowering our national debt, because if you take that $5 trillion and pile it on, it's a deficit, all deficits got to be paid, and you pile that on, we're going to be at $30 trillion. So he realizes that. So what he's scrambling to do, and he's sacrificing you and me and the economy for himself and his party, the party. And he's doing that on purpose, running stagflation. So inflation's so hot that means he keeps printing money, and the dollar value goes down, and that's how he's paying down his debt. Because he lies when he says it's all 100% paid for, 100%. No, it's not. He can go and tax all the billionaires, all the millionaires, and he won't even get 50% of the money he needs. He knows that. He's a liar. So what he's trying to do on purpose, he's putting us in stagflation to ramp up the inflation so he can lower the dollar value quickly so he can push the debt down. Again, a good example. If you have $1 trillion in debt, and all of a sudden your dollar drops by 20%, that trillion he owes China is only 800 billion. See, this is what he's doing. But he's doing that so that he can win this. You know, he don't care about you or me or anybody. He's doing this for the party to get this package through. So he doesn't care if he burns us, and he is burning us. What do? Join my gang, or if you're in my gang, listen to me. We're going to be staying with the stocks that fit this inflation. Example, we've been doing Home Depot, okay, and Costco and those kind of stocks. Okay, our bank stocks and oil stocks, be careful. They're going to start playing games and trying to push the yields back down. If they push the yields back down, then these wonderful bank stocks that had this wonderful rally and the oil stocks, they could start pulling back some. So be aware of that. If we got to get the 10-year Treasury yield to stay above 165, 168. And if you can do that, okay, if we can keep that up in that area, then oil will continue to lead, okay, and so won't our bank stocks. So keep an eye on that yield, 10-year yield. We don't want it below 160. I'll see you on the charts. Please remember, hit subscribe, like, and share. Join my gang free for 10 days.